Hey guys, Monday, 6th March 2017. It's about half past 7. So I'll say a big hello. Hope you're all having a great week. I've just got back from Slovenia. I was there for the weekend with some friends. This pizza that's on the desktop played a big part in this. Basically, we had the best pizzas we've ever had, except for one of my mates decided he hated it. Became quite a theme. Obviously, we weren't just there eating pizza. We were having lots of drinks, lots of fun. It was great. Yeah, it's good times, man. It's not a country I'd ever been to. And we just went out and had a really good time. So it was good. It was really good. Yeah, there's something else I was going to throw in with that. Yeah, we also discussed, well, I started banging on about how the euro's, not really worth that much as a currency anymore. I don't just mean the euro. I also mean kind of like I've been listening to this book. I'll post it up. It's the one which we've got from our trading circle, but it's called The Money Bubble, right? So it's all, and it's nothing new, but lots of it's talking about how the devaluation of each currencies, all this quantitative easing, the printing of currencies, and they're all kind of devaluing against each other to keep exports up and all the rest of it, to the point that they're not in good shape really, because none of them are backed by anything tangible. They're just kind of invented and I suppose hanging around on a computer somewhere. With the exception of maybe China, and Virgil and myself had a chat about that. But anyway, so we were talking. I kept kind of making my rather funny jokes of, well, yeah, you might as well have this €5 because it doesn't actually mean anything anyway. But yeah, you can say the same about the pound. I'm not particularly having a go at the euro per se. It just happened they were the Euros. But anyway, that was that. So that was very good fun. Slovenia, check it out if you get a chance to get there. But yeah, what's been going on then? Sorry, I'm jumping around everywhere. So it's a time of celebration because I have a weekly close here with that. You probably don't actually. I don't know if you've ever seen one of these on my screens before. You might have. I don't know. I can't think when. But that's a plus sign. And that plus sign indicates a week where we made some money. Now, we didn't make a lot of money. I made 0.13%, but I made some. And on a more serious note, this year, hang on, I've got another screen of it here. Oh. This is my trading history for this year so far. So as you can see, everything's been a losing trade other than one trade which closed Friday actually when I was just dropping my car off at the airport. Well, I wasn't leaving at the airport, I was dropping myself off at the airport while I was parking it. Yeah. So whilst we're on this vibe, it's a £61 trade on a 10 grand account is 0.6%, right? So it's not exactly the biggest trade in the world. I've noticed I've got one loss there that's bigger than it, but in general it's bigger than my losses, which is kind of where it should be. Obviously, I'd rather it was more like, a couple of percent, like 200 quid or something, and that's where I need to get to. But anyway, it is still a positive trade. I mean, it's actually kind of unbelievable how negative my trades have been. You could argue here this one too. Can I do that? I'm trying to highlight here this stuff. I didn't know you could do that. Anyway, that minus 259 there. Really, that's a break-even trade, but because it had been open a while and the roll and all that, I lost a bit on there. But anyway, yeah. I mean, in general, everything's been going against me. So having something that went in my favour was a positive for me. But obviously I still got some work to do to get out of this. But anyway, we'll do our thing, right? So that was that. So where was I? We've had this massive down trend, but this huge pullback on my equity curve here, which is now going to just carry on up. It's basically going off up to the moon there. But so it's down 3.95% for the year currently. So what are we? We're March, so 2 months. Not ideal, kind of the opposite of where I'd like to be, but Play the hand you're dealt. That's what we've been doing. So number of closed trades. I'm not going to go through them all, but we had a UK 100 trade. Actually, we'll have a look at that. I'll try not to hold up your time too much. I've already been waffling, haven't I? But let's really speed things up now. So UK 100. I had a short trade. I'm on the wrong time frame, so let's get the daily up there and the 8 hourly there, just because we're used to that a little bit more. Zoom out a bit. I got a sell on around here. Oh, hang on, it was on this pullback. So I thought this was rolling over. Market pulled back, went short, stopped out when it went higher. Equities are a dangerous beast at the moment. They have been for ages. I keep going and trading them, and I shouldn't really. Feel a bit embarrassed now I'm saying it. So that's that. What else is going on with equities? US 30 is no doubt doing far too well. Yeah, I mean, what are we at now? 21,000? Yeah, so it's been a massive bull for ages, even though we can't believe it. So that's doing that. The other indices are all fairly high. Won't go into too much of that. So yeah, some other trades here. I had a Euro USD trade, 10 quid down, and then these other ones which are break even here. I don't want to go through the whole thing because it might get a bit boring for you. But yeah, I made a very small amount, this week. But at least it was something. I've said that already. Let's not do it again. Carry on. Right, so that's the weekly close. So something positive there for once. I'll go into the weekly review. Interestingly, one of my friends was asking me about the UK interest rates. Made a comment about how the UK interest rates in 2007 were pretty high, and whereas, because we're talking about the housing market, is the housing market actually going to crash or whatever? Like, yeah, I've just walked straight into a nerve, haven't I? So obviously, by making that comment, I think the housing market might have a few issues, but which obviously aren't things I've dreamt up. It's through other sources and places I hang out. But we were just looking at the. She made a comment that interest rates were high in 2007 when there was this previous kind of correction around housing, which wasn't really that massive from memory. But yeah, I kind of said, yeah, but weren't actually that high. I mean, they're higher than they are now, but they're like kind of 5%, right? Whereas now, I don't even know what we are now, 0.5 or something ridiculous. But over time, that's not actually that high. And I was kind of saying, yeah, these suckers go really high. So I started looking. I went and Googled this to get it, and you can. Right, first thing to see. So we're going off another one now, but why not throw this in here? First thing, which is fairly interesting, is you've got these kind of 14% ones here back in November '90. I think that was when we were pegged to the euro. Something to be. Can't remember what it was. There was a deal that we set up that we had to do. Anyway, I haven't researched this. I'm just kind of freestyling this now. But what I thought was really interesting is it kind of demonstrated my point of what I was saying is that so the equity markets went down, housing struggled a little bit back in 2007. So as a reaction to that, they lowered the interest rates. And I've never really looked at it as a chart, and it literally falls off a cliff here. So I think it was February '09. It went zero. Well, pretty much. We were at that flat, and nothing's moved since 2009. So that's what, 8 years, somewhere between 7 and 8 years. So obviously, I don't know how often people think about this stuff, but or work this out. So if I'm boring because it's so obvious, I apologise. But what happens when everyone gets low interest rates? They start borrowing, right? I mean, that's the idea of why the government set them down there. So the minute they start borrowing, the governments know that where do we put that money? Well, obviously, you might buy a new car, you might do that. A lot of it, though, rushes into the markets, the equity markets, because okay, I trade forex and oil. How many people out on the street know how to do any of that? I'm not saying I know how to do it that well, by the way, but people aren't exposed to that. So what do? They go, oh yeah, well, I've got my trusty share advisor, I'll do that, or maybe I'll put a bit more in my pension, and that then goes into shares. So they do that, and the other one they do is property, obviously, because buy to let, whatever, booming, and there's been other things on that. So anyway, I just thought it was really interesting because I'd never seen it quite like that. So this literally fell off, and then we've been in a kind of a bull market since. Let me just change something. Yeah, it doesn't show it quite so well on the FTSE, but it's definitely, I mean, it is going up. It's not, so what was I saying, 2009? I'm going to get this down onto, let's go from monthly. So where's 2009? Yeah, there you go. Actually, it shows it perfectly well. February 2009, interest rates go to nothing, stimulate spending, yeah? Look at this freaking market here. When is that? That's March 2009. Jesus! I've only just done this, sorry. So in March 2009, you get the first rejection candle that we're maybe going north again. I mean, not that you probably be trading that. But that just goes to show what happens. Interest rate drops, money runs into these markets. Obviously, they're printing money as well, doing all this stuff. So it creates these superficial booms, if you like. I don't want to go into, obviously on the housing market, there is natural supply and demand. We are underhoused in the UK, but I don't think you'd find many people saying, from a financial perspective, that the kind of way that the markets are set up, the housing market is at the moment is, entirely natural. A lot of it is quite inflated and will be driven by this because you can just borrow money. And then, as all the guys that knock around in my circles know, people are effectively getting over leveraged again because of just that. They're used to interest rates which are here, and if they remember just, what am I? I'm 37. So 10 years ago I was 27. I'm really good at maths, by the way. So that would have put us here. So when I was 27, I do remember interest rates of 5. I remember interest rates about 8 actually. When would that have been? That must have been around here. Or maybe it didn't quite go to 8. Yeah, I don't know. I seem to remember I had an egg savings account when I was 18 or something, which would have been right. But anyway, point is, you've got at least 10 years worth of people that don't really know anything other than, 5% maxes. And interest rates go on average. Now, I'm not going to say it's going to jump straight back to that, but it has the potential to do that. So all these people that have signed up for these little, got their mortgages out based on that are going to feel the pressure. And it's going to be, unfortunately, it's going to be a really harsh time for them, I think. How are they going to pay it? But anyway, I maybe I'll buy them out. Sorry, shit. I didn't mean that. But yeah, that was an interesting side, one which I really enjoyed actually. And I hadn't looked at the UK chart versus the interest rate fall. Bang, there you go. There's a bit of fundamentals which I don't usually go into too much. Right, okay, so equities are off and running. Yeah, I really got sidetracked there. I hope that was some sort of interest. Oh, look, I've got an order confirmation there for my curry that's going to be here shortly. Yes, open trades. I'll just quickly go through what I've got open at the moment. So first of all, we've got a bit of silver going on. XAG. Now this is, I've been umming and ahhing about whether I like this trade or not, which basically should mean I shouldn't be in it, really, if I feel like that about it. But that old, that trigger finger gets going. So I've talked about this weeks before. I basically made a call that if it breaks out of this 18, you're likely to get up to, I actually have called 23, but I have noticed there's quite a bit of support around this 20 level. So I've actually put a limit in there in case it spikes, but I might take that off. Although, to be honest, at the moment, I've been grabbing a bit. But anyway, let's not worry too much about the limit. I think it could go to 23 if it gets out of here. The key thing is, I've gone long down here just below this 18. I saw this big pullback down here, and I've gone on the principle that it has actually broken out, and now it's just retesting, that support line. There's definitely an argument for it hasn't broken out and it could be going south. It's been rejected, it's going to go south. But that's what I've bet on anyway, as you can see. I've also got a stop loss which might be squeezed a little bit, so that's not the best rule in the world. I would have loved to have had it underneath that 17, but I wanted to have a trade whereby 0.25%, nothing too big, and it allows me to kind of see this play. And so far, it's not looking hideous. I mean, it's doing its thing. Okay, so that's silver. I'll keep you updated on that. What I don't like about that trade is that my reasoning is a bit like, yeah, maybe, and that doesn't really sound like great trading stuff. But yeah, I'm okay with it. Maybe I shouldn't be okay with it. Maybe this is the problem as to why I'm losing money. What on? Swissy Jappy. I quite like this one from memory. So, yeah, I made the play of the support line was here. Market broke below it, pulled back a little bit, got a position on. It's actually, it did go south, pulled back again, and I put another very small position on just to increase the leverage on it. Reason being, it pulled back to the 61% fib. Actually, we'll see it over here. It's a bit better over here. It's pulled back to the 61% fib-ish, a bit further. Round number as well. I didn't want to go all in or anything, but I thought, yeah, I only had, what did I have on? I had 0.3% on, so I've put another 0.1% on, so nothing, but just lifting it up towards that half. And it's playing ball right now. It looks bearish to me, so I'm looking for that to run along, and I've got big limits down all the way down. Oh, sorry, all the way down here. But I mean, if it ever gets down there, we'll be into some real money. So yeah, just sit with that. I'm not going to squeeze the stops too much, and I just hope it runs. Love seeing that pizza everywhere. Aussie New Zealand's closed. Yeah, it closed today. Yeah, just a failed trade. And then we've got Aussie USD, which is going Aussie. Well, yeah, sort of going well. Trading is uncomfortable. I remember, who was it that I got that? Somebody who did the Sharp Show or something, some trader. Dan Elderon, he used to call himself. Some trader I used to listen to a couple of years ago. And he'd always say, oh, trading makes me really uncomfortable. Like, he loves it, he was successful at it, but yeah, I mean, I'm uncomfortable. So the reason I'm uncomfortable is, let's use the left monitor here. Yeah, it's a bit better on the 8. So I've got, I managed to get short. Where did I get short? I'm still on the wrong one, aren't I? I need the Aussie dollar, sorry. Why didn't that change? Okay, carry on. Yeah, so I've been playing this with what I consider to be the sell signals over here on the daily chart. And what had happened was it eventually did sell off quite significantly. So I really confused my train of thought with the last trade being up there. As you can see, and then it's retraced a little bit. But the third trade that went on, I've got 3 positions open, clips in, and then of course it starts knobbing around, doesn't it? And that's what I mean by uncomfortable. So, I've had a nice run of it. There could be some money there, but what happens is my third trade clips, and then of course it walks back, which is eating up all of my profit. But it is looking okay. I'm fairly happy with it. It's showing a bit of support around this 7.6. So yeah, I'll be looking to let that just roll short. 18 minutes now. Yeah, and we've got some nice limits down here. I would love this. See, this is the sort of thing that will get me out of it. If we ever get down to stuff like this, I got 0.7, I got 1%, so that's 1.7 plus that. Say, if we ever get down there, although I don't think I would get down there, but you're looking at a 2.3% trade. The reason I don't think I'll get down there is I'll probably scale out before, but let's go with it. So yeah, that's me trading. That's me trading at the moment. I couldn't see too much else on there. What have I got? A USD CAD I've written down as maybe to sell USD CAD. Why am I got that? Yeah, so 8 hours starting to show a sell sign. I don't love this, by the way. I've just noted it down, and then you've got this kind of, yeah, I don't know. It's not great, is it? But we are seeing a sell sign, and it has kind of been going up, down, up, down, up, down. So it might. I don't actually hate this, but I don't know if I'm going to take it. I might talk to someone else about it. Phone a friend. So yeah, you might be able to get a kind of there to there sort of trade going on. So what would that be? 250 to 280. Yeah, it's not a great return on it. You could maybe squeeze it if you got a better signal. But anyway, it's just something to look at. There's a couple of things selling against the Jappy I've noted down here. Euro, Jappy. Yeah. The issue I have with it, so this is kind of pulled back, might be going south again. We've got a big whopping downtrend on the, in general, and it's starting to do it again. The reason I'm not going to take this is because I'm already long the yen. And then we've got Swiss Jappy. Oh, I'm already in that though. We've looked through that. So yeah, not loads out there. We have got some stuff coming out 3:30 this morning, tomorrow morning rather. We've got Aussie stuff coming out. Bank rate decision. I'm in the Aussie at the moment. I could get bumped about a bit. Lots of Euro news on Thursday, and then yeah, CAD and non-farm payrolls and unemployment stuff on Friday. So yeah, going to be quite a busy week, certainly for the day traders and the scalpers out there. But yeah, at the moment, today's been pretty quiet for me. Let me look at it. I'm £4.96 up, and I have checked my phone about 2,000 times checking my trades today. I've been a bit hungover. My flight didn't land till far too late last night. But yeah, so I've been tired. But yeah, I'm going to shut up now. Anyway, helpful, leave me a comment. Love to hear from you. I hope your trading's going well. Feel free to shout on anything on the Facebook thing. I'm determined to get out of this hole. Well, hole, you know, it's not a hole. I just see it as this is what we're doing, and this is the consequence of how the markets are. But we're going to keep doing it and have a successful year. Bring it on, live the dream, woo, and go to Slovenia. How do I stop? Always do this every time.